Hi there. So prices in the US just rose by the smallest amount in 2 years, now 3% higher than they were a year ago. Around the world, in countries like Australia, those prices a lot more stubborn, sitting at just over 6%. So will Australia's Reserve Bank continue to raise interest rates or take a wait-and-see approach when it meets? For more, we're joined by Will Banks from Schillings Capital. You can always lift rates, but we often look back in history and say they rose them too far, too quickly, too soon, and had a pretty bad impact on the economy. What do you think they should be doing right now?
I think at the moment it should be the wait and see. The consumer price index is lower than expected. The CPI in June quarter rose by 6%, which is good news, as it was anticipated it would be 6.2. So I think this does reflect that inflation is slowing down. This is despite the fact that rental increases having increased the fastest in 35 years. So I think they should wait and see and just see how these increases are going to flow through into the economy.
We've got a story on our website at the moment about how a lot of younger property owners who've been buying big, their first home perhaps over the past couple of years, are now having to sell up. Surely that is a sign to the Reserve Bank not just to be looking at inflation, but the impact that it's having on actual people out there.
Absolutely. They are selling up partly because of the interest rate increases, but it's also down to the fact that the disposable income has been eroded. When you look at things like the servicing inflation is persistent at about 6.3%. You look at the increase in energy bills, which have surged by 72% for electricity, 54% gas since 2013. It's having a big pressure on the whole economy, not just the younger people who have bought properties, which now they just can't afford to keep.
We saw good news for the US economy as inflation numbers started to tick down, yet that wasn't enough for the Fed. They decided to lift rates regardless of that. What do you make of that, and do you think that that could be a precedent for the RBA to do the same?
That's up to them. Obviously, they're taking a view of their own economy. I think the RBA needs to take its own view. I don't think it necessarily needs to follow what the Fed's doing or even what the Bank of England doing. The RBA is independent. So I think that they would just need to review their own situation. I mean, Canada's also experienced a 2.8% rise in prices last month. And New Zealand is matching Australia. So I would expect them to do their own thing as well. I do think that they need to wait, allow these rate hikes to kind of flow through. I don't think there'll be any benefit from increasing the rates tomorrow. My view would be to wait and just see what happens.
How much higher do you think rates could actually go?
Wow. If I knew that, I'd be putting down a bet, I think.
But are we talking about 1%? Are we talking about 0.5%? How much more do you think there is an appetite to deal with the, I guess, inflationary pressures from the demand point of view anyway?
We've still got these issues in energy bills. We've got issues with labour costs increasing. We've got to grips with the supply chain factors that were pushing up prices as well. Having said that, though, food prices are still rising, especially eating out. It depends on the other measures that are pumped into the economy. So, for example, to look at alleviating the cost of living pressures, the Commonwealth is going to release a rental assistance program at the beginning of September, and it's going to be the largest rental assistance package in 30 years. But I mean, putting money into the economy and supporting the rental market, in my view, is only going to add to inflation. So to answer your question, how much will it go up by? I don't think they'll go up tomorrow. Do I think they'll go up the rest of the year? I think at least one more time, I think they will go up. I think they'll maybe put them up by another 25 basis points.
Right.
Then I think they'll sit back. But depending on what the other measures they implement, that could then change that approach.
I guess the frustration, though, Will, is that this is dealing with demand but not supply, and the Reserve Bank can't do much, and neither can the Fed, about the price of oil coming from the Middle East thanks to the Russian war.
Yep, absolutely right. That is a big issue that they can't control. I guess That's why a lot of around the world are now looking more into renewables to ensure that this situation doesn't occur again. Australia has a huge benefit of having glorious sunshine, surrounded by oceans. So there's plenty of other renewable energy that can be implemented over the next 5-10 years to try and mitigate the country being put in this situation again.
All right, we'll leave it there for now. Will Banks, appreciate your time as always. Thank you.
Thank you.
And that is a program for now. For more finance stories, head to tickernews.co. See you soon.